Welcome back to Morning Trade Live. We're going to do a little trading, talk some stock picks that go overlooked in the growth category. Joining us, Bruce Kahn, Senior Portfolio Manager at Shelton Capital Management. Bruce, welcome back to the show. Give us a refresher on your stock search and what you're finding, because it seems like you're kind of moving down the market cap spectrum a little bit, looking for some overlooked themes, and that's been kind of a tough gambit trying to get outside the mega caps.
Yeah, well, thanks for having me, Oliver. Great to see you again.
Appreciate that.
Yeah, it's been a bit of a rocky road for small caps, and certainly in the green energy space. But I think we've seen the bottom, and we saw in June a little bit of a sell-off, but in May, we had seen really tremendous resurgence in the area. So there's some choppy waters. We expect that to remain somewhat choppy until we have some election certainty. But a lot of the names that are bolstered by the Inflation Reduction Act, the CHIPS Act, and the bipartisan infrastructure bill are all poised for tremendous growth over the next 3 to 5 years. So I think, for investors who are thinking like, what is it too late to invest in the transformation of the industrial economy? No, it's not too late.
Are there any risks, like post-election, that if a new guy comes in, he won't be providing as much money to this stuff, or is the money already there and is the kind of groundwork already paved?
The groundwork's already paved. The money is coming. It requires permitting. So once these bills were passed, operators began bidding projects, and those need to be permitted and then constructed, and so revenues will be coming after that. And some of the Inflation Reduction Act is actual tax credits. So the earnings from those tax credits will get priced in once financial investment is done. But you still have some time to do that today.
Okay.
Just to follow up on your question,
yep.
If there's a change in administration, does that impede any of this growth? Absolutely not. No. What could get impeded is some rules around regulation from the EPA, and as we saw last week in the Chevron deference case, that may cause more litigation, but these projects are underway.
Okay. A few of the names that you like, that you're in, that stood out to me. One that I wanted to follow up on, we've talked about before, I believe, which is Hannon Armstrong, which is a lender basically to a lot of these sustainable companies, kind of a financial way through this. Stock generally has performed pretty well. Are we still finding that companies need to come to capital markets, need to have a lender, a financial sort of partner to get things going?
Yes. So they require projects to be, a renewable energy project, or even a renewable energy power source for a utility to fuel and power AI generation requires an enormous build out of CapEx. Hannon Armstrong comes in and provides capital to those projects. So it's lending and taking equity positions in these projects. And those are the projects that ultimately generate yield, because they're selling electrons ultimately. Now, what's really exciting about this stock, there's two things. One is last year they announced that they are no longer going to be operating as a REIT. So as a function of that it has unleashed revenue growth at the corporate level, that in the form of equity. And so that's really exciting. And then the second part, which you alluded to, is they recently joined a joint venture with KKR and now have a $2 billion pile of cash to put to work into renewable energy projects. And that's really exciting. And for investors, this is a way for non-accredited investors to really get access to project finance, renewable energy, private equity. This is how a retail investor can get access to that part of the market, which is seeing tremendous growth.
Love it. Shares also did really well and rallied on the last earnings in a pretty big way. So it seems like there's some recognition of some of that spending potential they've got with the investment too. A few big winners in this category that I wanted to hit on: Xylem and Clean Harbor. Let's go Clean Harbor first. CLH. pretty interesting trade. Firstly, the stock's been going crazy, but this is like waste oil recycling, or how does this work?
Yeah, thank you for that question, Oliver. The Clean Harbors, is an oil field equipment service company. So, and not just oil fields, any industrial waste processor requires their equipment to be cleaned. So, Clean Harbors goes out, collects the equipment from the industrial process, brings it back to an environmental cleaning system, which is approved by something called the 1601, which is a standard for requiring all equipment to be cleaned. They are the leading cleaner in this area. And then they return the equipment. Now, what's really interesting about Clean Harbors is, and if you've seen this in the news, there is a forever chemical that has been identified that is in our environment called PFAS. And Clean Harbors is the country's leading expert on how to remove PFAS from the environment, from water, soil, our foods. So the market has understood that this is a huge requirement to clean this forever chemical out of our systems as quickly and as possible, and that is what has led to a lot of the growth prospects for Clean Harbors.
Really interesting, very cool. So kind of a way to almost kind of play into someone trying to solve a pretty big problem there with PFAS. All right, chart looks amazing. I mean, the thing's done great. The other one that's done pretty well is Xylem, which is a water tech company. This one I'm actually familiar with either we've talked about before, or a few other guests have, but this one's cropped up a few times as kind of a clean energy, clean resources trade.
Well, think of going from a dial-up telephone to your iPhone or your smartphone. That is what Xylem is doing to our water infrastructure. It's turning it from analog to digital. So if you're a water utility and you've got 100-year-old pipes, 100-year-old valves, and maybe 50-year-old monitors, Xylem is going in and providing the gear and the equipment to those water utilities that modernizes the water system. Again, this is a well-known story within the sustainable investing space, but not a very well-known story in the AI space. And why is it important for AI, as is Hannon? Because if you're going to have data centers, you're going to require an enormous amount of energy, because those data centers run 24/7, and it's like enough power that would generate for Ireland in a whole year is in one day in a data center.
Wow.
So coming with the need for that additional energy is the need for additional water, because you have to have water in order to cool these energy plants. So Xylem is, if you're looking for other ways to play AI, the infrastructure that's going to support AI is going to be really important. Energy and, of course, water.
I love it. It's like we've talked about like the secondary trades. It's like a tertiary trade, and people want as much access to the whole pipeline of things connected to massive data center and AI build out. So they've already been playing the utilities as a sector. So, Xylem kind of fitting into that theme. And it seems like
absolutely
with the stock doing well, it's one explanation. Good stuff. Really interesting. Nice little offbeat picks for us there, Bruce. Cool. Appreciate your time.